Morning everybody, it's Chris here from Serene Education with the 4 Majors Analysis Update for the 16th of September 2011. Hi guys, it's going to be going over the Euro to start with on our CTC strategy template. I've got the daily up in front of me. You can see we've had a nice bounce off the long-term support and resistance here at the 13,500 mark recently. I'll just put that in so you guys can see it. Long-term support and resistance at this level. If I zoom out, you can see clear support and resistance. This is a daily chart, so each one depicts a day. You can see early part of this year we saw correlation, and the last part of last year too. And price has been steadily falling ever since it broke through a major support and resistance level at the 1400. Now, where to for this pair? Well, we've seen this particular pair falling 100% of the fib extension. So that was the initial fall, breakout of all this, this correlation, this consolidation, upside movement, breakout. It consolidated above the institutional moving average, including the 1400, and broke and continued to fall. And we saw another 100% extension, which took us to the fib extension, 100% at the 13,500, 1355, 50 mark. Now we've seen a pullback. Now this pullback has now pulled back all of 61.8, and we've now found a bit of resistance at this level. So 1390 is also another level here. Psychologically, we've seen a slight consolidation against the major downtrend. So where to for this price? Well, in order for price to continue to the upside, we want to see it trading above 13,900, and ultimately we'll be looking at another 100 pips to the 1400, which happens to be our long-term support and resistance level chart. Failure to break above that, and failure to break above the institutional moving average would see potentially a very bearish breakout consolidation, with an outlook to see still continuation to the downside in our favor. So intraday, you've got to see the 13,900 being breached. We've seen a bit of consolidation here against the trend. CTC on a 4 hour, two parts of the four-part strategy are up. Swing highs depicting upside trend, which is important. The two intraday smaller time frame moving averages have been breached. However, we still need to be trading above this resistance level here that we are at now, and once we can do that, then ultimately 1400 would be our next potential target, because this is a long-term support and resistance level right on our daily. So we have a potential of 400, another 100 pips or so if we can get above the 13,900 mark. Hourly, you can see the institution moving average has been breached to the upside, which is a good sign. Swing highs depicting upside movement, fantastic. Where to now for price? Well, we could see it going sideways, consolidating, because it has tested a 1300 mark, which happens to be also an intraday support and resistance level. But as long as it stays above the institution moving average, i.e. where it's trading right now as we speak, the support at the 13,850 mark, then we could see second extension continuing higher as we move further towards this upside trend on our intraday charts. Okay, up my swing high, swing high, swing high, depicting upside movement. It's got to break those swings in order to be looking bearish. It's trading above all the moving averages. Great, CTC's in our favor. We have a red arrow. However, CTC on both sides are still blue, so we see a consolidation against the major upside movement pull. Got to see 13,900 being breached for us to see another entry level upside. However, if we see a break of this 13,850, which happens to be a price support for quite some time, and a breach of this trend line, then ultimately we're looking for a potential pullback, and there again we could be looking at places like the 13,700 for our first target. Ultimately, second target, we have a bit of consolidation here at 13,700, but ultimately we'll be looking back down at our 13,500, way down in the bottom here. Okay. Next pair up is the UK sterling against US dollar. Good old cable. Let's have a look at the daily. Here again, like its euro counterpart, we're seeing a slight consolidation against the major downtrend. This pair has been really falling over the past couple of weeks. We've seen a lot of swing lows very, very rapidly, a lot of sell-off. To the downside, we have broken large support and resistance levels to the downside, including the 1600. We had a slight, there's another one here at roughly the 15900 mark. Here's loads of consolidation, 15700. This is the one just recently. We had this indecision candle the previous day on Wednesday. Thursday's candle, we had a lot of upside movement, primarily because news out yesterday that the ECB was making more money available through bank loans, etc. like that, and everybody got on board. We saw some huge moves yesterday across the board. Shares rallied throughout the UK, well, throughout Euro, and it was good. So we have a consolidation now. This is a good sign. However, we need to see 1500 being breached to the upside. CTC still remains negative to the downside and will remain so until we see anything. We see price trading well above the institution moving average in particular. Intraday consolidation, as I mentioned, you look at the 4 hour, for example, lots of support at 1575.50. A lot of them. Look at these wicks. Hammer, doji, bullish engulfing. So important to get some sort of clear indication from the market that we're looking for upside movement. Sure enough, we got it yesterday, and we've been trading that. Bullish upside movements, and then we saw the massive move to the upside. However, lots of wicks to the downside, shooting stars, consolidation wicks to the bottom, and sure enough we saw price reverting to the upside. But all importantly, it's still trading above that 15800 mark. Definitely a consolidation band here. You can see there's definitely a box consolidation here, and what we're going to say to ourselves now is great, cool. So we see some upside movement yesterday, and we're consolidating now. A lot of wicks to the bottom, so this could be potentially a bottom. Notice a 4 hour chart. Swings have been broken. So the major trend to the downside at this level was breached. So we've seen a consolidation against the trend. We want to see a reversion to the downside in order to be looking. So we need another break below 157500 at least, to still look at further bearishness in this setup. Otherwise, what we're going to see now is consolidation against the major trend. We have seen a break of that trend, and we could be looking for potential upside again. So ideally, we could see another reattempt at 158700 mark on our 4 hour attempt, back up to this 50 period moving average on this time frame. CTC is still negative, but if you can stay above the 15800, it's trying to do quite badly here, is we could see that second extension jump higher. So we go into our smaller time frames. CTC is still looking negative. The consolidation here, you can see quite clearly, is happening. So you can either say to yourself, great, I don't want to have anything to do with this until we have a definite break above this consolidation band. So you're telling price, you're saying, listen, give me a heads up. Ideally, you want to be trading above the institutional moving average. The smaller the time frames you go into, because it's more positive. Okay, so if you're trading off an hourly, got to get above this institutional moving average, the green one. Until it's doing that, then we're still looking for further bearish sentiment. Okay, very, very important. Major downtrend has been breached just recently. Great, but most importantly now, if you just put it together, could just be a fake out. Consolidation against the major trend. You can see here it's still consolidating. Still a lot of indecision over the past week or so, and this consolidation range against the major downtrend. We have seen a lot of bearishness downside. So need to see price action trading above the institution moving average. So in this case over here, clearly we had a price support and resistance above the 5900. So if we can see price pushing higher, getting above at least the 5900 or 159500, then we're looking at bullish sentiment creeping, because all of this work over here, all this decision would have been taken out, and then we should be looking for upside. Failure to see that and consolidation, we could see prices trading against the institution moving average here at 158500, the top end of this box, and the institution moving, I'll just say, listen here, back down again, my boy, and sure enough, push it lower. So we are consolidating, lower swings. We have a higher swing here, but ultimately CTC is still governing this, and we're still looking pretty negative overall. So got to see the price actually trading above those levels here. 1585, 100, would be far better, because by then we'll definitely be trading higher and it'll give us further scope for further upside movement. But until then, we're just seeing a consolidation against a major downtrend, and so we should look potentially for another potential move south in the direction of the major trend. Next pair is the US dollar Swiss franc. Good old Swissy. Let's have a look at the daily. Here again, loads of indecision at the 89,900, what happens to be the institution moving average. This is after the Swiss franc picked its currency. We saw this massive move in the market, really moving at the upside. 8%, 9% moves in a day. We saw what it's done now is it's brought us to a price support and resistance level here at the 8900 mark, which is coinciding with the institution moving average. We saw some hammers, dojis, and this one over here, a little bearish engulfing, a little morning star pattern, not the best, but indecisive, plus the decision at that level there. We saw pullbacks occurring. CTC is still extended blue though, because we've had this major move to the upside. It's really broken above all this negativity in the market. You could see we have been bearish for so long, but we have had a breach, which is very, very good. So in order for pair to for this to remain bullish, okay, we need to see that institution moving average being breached, and price needs to be getting well above the 8900 mark in this particular case. So excuse me, where are we like to see this retracement go to? Well, we're still trading above the 23.6%, and notice on the daily, price failed to break and close lower than that area before. If this is to remain a very strong upside movement, then we should see support being found at this area here, and we should see a reattempt of the 8900 in very short and due course. If we do that and see a definite support found at this level, then we should be looking at the 38.2 as our next potential downside support 1 or 2 in this case at 85.50. Sorry, the 8500. Fail to find support there, we'll look at the 50% 84, and then if it's going right through to 61.8, then we should see further extension lower to at least the other side of the institution moving average, or sorry, the major trend line in this case, around the 8200 mark. Okay, so where we are now, intraday, let's see if we can get some more support at the low end of this wick here at the 86.54 mark. So let's make a note of that, 86.54 intraday. Where's 86.54? So we go to 86.54. Where are you? 54. There we go. There we go. So that's where price needs to stay above intraday. Notice the lower swings going into this consolidation against the major upside. We tested 8900, failed to break above it, and we've seen price reverting to the downside in that case. Lower swings depicting price action move, and we saw a breakout yesterday. This after banks started try to free up some loans intraday to start selling to entice more purchasing and stuff like that, which actually started this kickoff yesterday. We saw the US dollar lose a bit of ground against that fact, and then slightly it's been pulling back ever since. The same, it just correlates with all the other pairs that we've seen so far, the euro and the sterling. So if you know how to trade that, then brilliantly. You would have been definitely in the money yesterday when those market moves occurred. Notice that move there, the breakout extended 100% of that initial move, and we capitalized quite nicely on that, and the CTC was in our favor. So yeah, we made some money, definitely to the downside, but we're still back in this correlation. Institution moving average now acting as a potential support area as we go into today's trading session. So as it stands now, to see further upside movement, we've got to be trading well above the 87.50 again. And then we can look at the 8900 to start with as our first potential target. CTC is giving us a potential buy signal. However, we need to be trading above this resistance level. Don't want to be trading into resistance. Very, very, very... don't want to be breaking that rule. Otherwise, you'll be just trading against the major market. So don't want to be doing that. You're going to say, great, everything's in our favor. but we still need to be trading above at least 87.50 to definitely give us that momentum drive to the upside. Till then, looking for consolidation against the major trend, with potentially, if we see a break of 86.50, then we're going to be looking at the low end of this, and as I mentioned, we could be looking at 38.2 as the next target here at 80.50. 8400 is our 50% retracement, 61.8 at 82.50 being our support, 1, 2, and 3 to the downside if we see breaks of the 86.50. Last pair of the day is US dollar against the Japanese yen. Okay, we saw price trying to break out and of this major support we've seen for a long period of time. This is following the same thing that happened when we before we breached the 80 mark. It was just consolidating on this bandwidth for a very long period of time for the latter part of this year, and then we saw a breach to the downside, intervention which failed to stack up, back down to the bottom. Yeah, we saw potential break to the upside after the Swiss government tried to peg its currency. That failed. Saw resistance, tabletop, a lot of resistance just above the 77.70 mark, and bearish engulfing after indecisions, spinning top, bang, back down into, or back towards the 76.50 mark, and back into this consolidation box here, which happens to be between 76.50 and the 70. So, as I mentioned yesterday, we're going to see price just doing this again, consolidating against the major downtrend until we see a break to the downside. So a breach of 76.50 would definitely give us a bearish breach to 76.50. Would definitely see us looking for further extensions lower. Otherwise, we're looking for a break and close higher than 7700 to look for potential upside moving back up to at least the 77.50 mark in this case, which happens to be the moving average. So CTC well extended to the downside, primarily because we're just seeing a consolidation and a consolidation against the major trend. Still seeing lower swings on this time frame, and until we see anything other than that, we're looking for consolidation in this bandwidth here between 76.50 and 77. Got to see a break lower, confirm downside movement. Got to see a break higher to start looking at upside movement. Till then, pointless trading it because this trading range is just too skittish. You might be able to pull money from it, but it's like pulling. If I go down to the smaller time frames that you'll be trading, like your 50-minute, for example, it can be very tiresome. US dollar, Japanese yen. Besides intervention, which really needs to be seen in order to see any price action move on this pair, it's very slow, stagnated, and it's entirely your choice if you want to be trading that. But there again, if it's in this bandwidth, it's more than likely just to go, or just to trade very, very slow. I'll just put in those areas again. There we go. That's the trading range you want to see the breakout on. Okay, have been in this trading range. This is a 30-minute time frame, so that box I was telling you about, that's the range. You can still make money, don't get me wrong. There's still potential here to look for potential downside movement and upside movement in this pair. However, it's very erratic, it's very volatile. Got to make sure that you have, stop your money management is crucial. This when you have a lot of volatility in a pair. And at the moment now, you can make pips, but I'd rather stay away from juicy big breakouts, confirmation signals. We have higher swings though. 76.50 price almost reached it yesterday, and then we had higher swings. So we have a correction at this level here, and until such time as it breaks either end of this, then we're still going to see consolidation. So it'll be consolidating in this box. There, you can make money. Don't get me wrong. You can take pips. You just got to be patient, especially on this pair. But the institution moving average is now not too far off from us. But if it does breach that, then 7700 is still on. Fails to break 7700, then we could see a revert to the downside. That's how you trade this pair. Okay, so until further notice, you can either CTC on our smaller time frames is looking bullish for upside movement to at least the 7700 if we can breach the 7685. Are there enough in here to make pips? No. So there again proves my point. By the time you get a decent sell signal or buy signal, you don't have enough in it to actually warrant taking the trade because your risk management is just too high. So that's it, guys. Hope you have a fantastic last trading day of the week. We've had a lot of momentum this week. We might see some consolidation against the major trend. Yesterday's favorable news, trying to get I came out with ECB. Might continue further today, but we are seeing consolidation, so we want to see the market giving us or showing us her hand before we actually step into any trades. Otherwise, we could see consolidation with potential further cases where we're going to see the market taking profits off the table from this week's downside movement. So we could see further consolidation, and then we could see another continuation or another move coming into next week. So it could remain to be seen. Just be aware that we could see consolidation. Excuse me. So follow your templates. Very, very crucial today. If you don't see anything, then don't trade. Have a nice long weekend. Be happy with what you've taken this week. It's those traders out there that are taking small profits, but consistent profits. Consistent gains makes you a brilliant trader. Don't look for the one-off 100, 200, 300 pip moves. Depending on which time frame you're trading, then great. If you're trading your long-term time frames, then those profits will be available. You have to be patient, but your money management needs to coincide with that for those time frames. Be happy with what you've taken and consolidate those gains. The more consistent you are as a trader, the better you will be as a trader. Other than that, hope you have a fantastic weekend with family and friends. Put your feet up. Take it easy for the weekend, and we'll see you again on Monday morning nice and early. Until then, trade serenely.